What's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and the macro market update analysis video. Now, I want to first start off by apologizing to all of you guys for not posting a video yesterday. I know that I have been very consistently posting, daily updates. So for those of you who had been waiting and did not receive, that video notification, sincerest apologies to you guys. It's just that Sean and I, we do have family down right now, and this is their last few days with us. So we decided to spend some downtime with them before they leave. And ultimately, guys, that's part of the Mango mantra, right? That's a part of trading the Mango way. Also being able to give the key components of your life, like family, the proper attention that they deserve. Right? Make it like a wholesome experience. Trading should be a wholesome experience. It's always journey before destination. Now, in today's agenda, guys, we'll be talking about the macro markets, specifically, the data that came out. On just day before yesterday, we received the CPI data. So I'll be going over that number because I feel like the market's overreacted on that one data point that came out. Now, I'll give you my thoughts on it. Okay, ultimately, the market is always right. But I'm going to approach this with as little bias as possible. In addition to that number that came out, which is a CPI print, we will also be going over the target rate that the market is forecasting. The thing is that the FOMC meeting now takes place in 6 days. That's all that's left, 6 days. And what we're seeing right here, not just on Bitcoin, but across the board, is a whole lot of freaking uncertainty right now. Okay, there's a lot of uncertainty. So we'll be sort of unwrapping these numbers, and then we'll be jumping onto the charts to see what price action is telling us. Because if there's one line that Sean has given me in the past, it was in a moment of his wisdom that he has quite often, actually. He basically said this one line. He's like, "Let price be the arbitrator of all debate." I'm like, damn, that's freaking profound. So at the end, guys, we'll be jumping onto the charts to see if the price is telling us anything. Is the price putting a rest to the macro market debate? Alrighty, so with that, let's jump right in. Perfect, now here we are on my scribble pad. As far as economic dates are concerned, guys, the next most important economic date comes in on the FOMC meeting, which happens in 6 days. Okay, now why is the FOMC meeting important, especially this time around? I feel like that if there's any day where we might just see volatility on the charts, it's going to be during the FOMC meet. Okay, and the FOMC meeting is important, or the day of, rather, is important because Jay Powell comes out with his decision on the next interest rate hike. What does he intend on doing with interest rates? Does he intend on increasing it once again? Does he intend on keeping it flat? Or does he intend on decreasing it? Based on what side he basically leans on, will we see a reaction in the markets? Now, I do believe that the volatility is going to be on this day because as far as markets are playing out right now, it appears that everyone is very, very, very uncertain on what he's going to do. So uncertain to a point where it is difficult to price things in. Now, I've been talking about this, for weeks on end, where markets are forward pricing, even when it comes to interest rates. Right? They will first forecast on what he's going to end up doing, whether he's going to end up increasing, staying flat, or decreasing. They will then price that in, getting into the FOMC meeting. Okay, but because there is so much uncertainty right now, even pricing it in is becoming very, very difficult. And that's why I believe that the volatile move might actually come in on the day of. Okay, now I'll tell you why I believe that markets are going to have a difficult time pricing this in. I'll go over that in just a minute. But let's go over the data points that came out. Now, what drives Jay Powell's hand in really, making a decision on interest rates is 2 numbers, right? And he's been very, very honest and candid about this. He's been looking at employment data, or rather unemployment data, plus he's been looking at CPI. Okay, and I do believe CPI is the main number right here. Now, CPI is a direct gauge on inflation. Now, we know that on a month-to-month basis, especially last year, inflation was a very, very big problem across the globe. Now, what the Fed wanted to see as improving economic conditions is for inflation to come down on a month-to-month basis. Okay, now this chart right here, this historical data chart that you see on my screen, this is a show of, well, CPI on a month-to-month basis. Now, the one column that I want you guys to focus on is this column right here, okay? Because these are the actual prints that we have so far. Alrighty, notwithstanding the most recent one that we got. I'll be going over that in a bit. Now, if you look at these numbers, okay, in line. Now, this was October's, this was November's, this was December's, this was Jan, this was Feb, okay? On a month-to-month basis, guys, they've been going down, okay? From 8.2% to 7.8 to 7.1 to 6.5 to 6.4. All right, it's just been a downward trajectory for inflation, and that has been a very, very good thing. That is essentially what the Fed wanted to see. Right? Now, the markets, they've been looking at these numbers coming out and then, you know, accordingly actually going and pricing things in, accordingly reacting to the data. Now, what happened this time around, the market got spooked out on this most recent print that we just got on CPI. Now, what was the print on CPI? This was the print right here. The actual number that came in on March 14th was also 6.0%. Okay, in line with the forecast, equal to the forecast. Now, because it was equal to the forecast and not less than the forecast, the market took that as a bearish tilt. Now, this is where I believe that the market overreacted, because if you have to really look at the numbers that actually freaking matter, which is the print from the previous freaking month of Feb, we're down, okay? 6.0 is less than 6.4. So, and the thing is that, like, even if you look at these entire interest rates, you know, while they're forecasts every month, when you're looking at the data presented to you, it's not like they're like actual forecast, previous forecast, right? That's how trivial I believe the forecast is compared to the actual trajectory of inflation. Where is inflation going? What is the sequence of events, right? So far, what we're seeing on a month-to-month basis since October is this. Inflation has been going down on a month-to-month basis as far as actual numbers are concerned. Now, Sean had a pretty cool theory. He's like, what if they tried to sort of, you know, play around with the number? What if it actually came out at around 5 point something, right? The markets would have rallied around 5 point something, because as human beings, we're not going to look at the point something. We're going to look at the closest visible whole number. If it came out at even 5.8, okay, we're not going to look at this as 6. We're going to look at the closest visible whole number. This would have been rounded down to 5%. Markets would have rallied on just this. All right. So Sean's like, what if he just wants to like temper the markets before the meeting? I'm like, okay, maybe that's possible. But either way, I think the markets got unnecessarily spooked out on this sort of read right here. Okay, just because the actual came in equal to the forecast of 6.0. The market looked at that as a bearish tilt, but everyone's missing this picture, which is the only picture that honestly matters. 6.0 is less than 6.4. Okay, we're still on a downward trajectory as far as inflation is concerned. Alrighty, now why I believe that this is all very, very difficult to price in, and the market is struggling to price this in, and that's why we're seeing uncertainty and hesitancy as far as price action is concerned, is because of this. If I now take you guys on over to the target rate, okay, now this is the probabilities. People are forecasting on what Jay Powell is going to do in the next 6 days. Is he going to keep rates flat at 0 BPS, so basically not increase interest rates at all? Or is he going to increase it by 25 basis points? Now, I do believe that the market is having a difficult time pricing this in. Because to price anything in, you need a bit of consistency in the data, right? And what's been happening, and I kid you not, just earlier this morning, this was changed. It was not these numbers, okay? Because right now, as things stand, 32.8% of the market think that he's not going to increase it at all, and 67.2% of the market think that he's going to increase it by 25 basis points. But I kid you not, if you just look at this table down here, right, just 1 day ago, guys, this was yesterday, okay, just 1 day ago, these numbers were inverted. Okay, so it was 67.2% of people thought he was not going to increase it at all, and 32.8% said that he was going to increase it by 25 basis points. Alrighty, so when you have this much volatility in just the target rate forecasts, it's showing you two things. It's number one, The market is going to have a very, very difficult time pricing things in if there's going to be so much inconsistency in the data, right? You cannot really rely on this if it is changing drastically on a daily basis. In addition to that, the second thing that this is telling me is that there is growing distrust in the Federal Reserve right now and their decision making. Right? So that's why people are very antsy as to what to expect from the markets. But if I'm just looking at the data that's been usually driving them off late, which is CPI and unemployment, these numbers came out pretty good, man. CPI 6.0 less than 6.4, okay, and unemployment up. And this is technically what they wanted to see to warrant, decreasing the pace of interest rate hikes, right? So now with this recipe, in addition to a banking crisis, I think altogether, the Fed does not have a choice then to lean dovish in the next meeting. And in fact, if you just look at the charts, right, if you get on over to Bitcoin, if you had to put a gun to my head right now and say, Krisha, what side are you leaning on, bullish or bearish? Even in this juncture, even as far as macro markets, as uncertain as they are, pick a side. I'm saying bullish, just based on price action, guys. All right, if we are following the entire mantra of let price be the arbitrator of all debate, price action right now is leaning bullish. Yes, we're going to have some pullbacks in the interim, but those pullbacks, in my opinion, with this current picture, for me, it's going to be opportunity, okay? That's how I am looking at the pullbacks. Now, where's the opportunity really stemming from? Well, guys, look at price action up against its major regions of resistance and support, right? Now, I'm currently on the monthly time frame, and I have highlighted a very, very key zone for you guys on the monthly time frame previously, right? Which was the 55 EMA right here at around 23.5K, 10 simple moving average around 20.7K, and the midpoint. Right now, as things stand, look at where price is showing strength up against. Hell, we're living currently over that monthly 55 EMA. Okay, we have put in a brand new high on the monthly time frame. There's a very clear shift in order flow here, right? From selling to buying. Right, and that's why I'll be looking at any pullback on the chart as opportunity. Now, where is the next pullback really going to come to us at? Well, clearly we are seeing a pullback here, and that is primarily driven once again by, well, uncertainty in the market. But say if you didn't have any clue of the market conditions, and if you just want to play pure TA, you can see that we had a cluster of resistance overhead with the 200 simple moving average, the 555 EMA, as well as the 200 exponential moving average, and that's essentially where we got rejected off of. Now, well, we did see a massive rally above that region. I remember when this was happening, I'd gone into the Grove and I'm like, damn, here comes 27K, guys, buckle in. The thing is that always wait on that candle close, right? Because you could see moves like this wherein price will go peak its head above that region only to close under, as we did right here, right? So the daily failed to close under that cluster of weekly resistance overhead. Right, so right now it appears that we're coming down for another retest. I do believe the next proper bid opportunity is going to be given to us on this region right here, 23.5K. Right, this is once again another sort of pullback region that I'd highlighted out for you guys in my previous video. So I'll be sticking to that. 23.5K might very well be the next pullback region for Bitcoin, especially leading into the next FOMC meeting, right? I'm still leaning bullish on here, so I do believe that the next pullback is likely going to end up being a higher low on the chart. Okay, now the 23.5K region also lines up with monthly support at the 55 EMA on the monthly time frame. Okay, so I'll be keeping this simple. What I personally am going to be expecting is something like this. Okay, because this will also then sort of drive in this massive pattern that everyone's been spotting, right? Which is this right here. It's a, I'm just going to turn off my ribbon for now. It is a inverted head and shoulders pattern. Okay, it's a very, very clear inverted head and shoulders pattern. Right, if I just go ahead, turn on my volume profile, you'll see that if I just bump this up a bit, we do have a descending sort of volume profile on there. Okay, so I'll be looking for this neckline to break, so essentially price closing over the neckline. Notice that the neckline also lines up with that cluster of weekly resistance right there. Now, if I go ahead and take the measured move of, this pattern and plot it on the break, where will that take Bitcoin up to? That will take us up to $41,000. Although I'll tell you that there is one major target that I'm gunning for, 42.7K. Very exact, but yeah, I've back tested it. I've used my systems to come up with the target. I know Sean has a very, very similar target confluencing with that one. 42.7K being the next target. But yeah, what's cool about this is that now we're also seeing confluence on a reversal pattern, right? The reversal pattern being the inverted head and shoulders pattern that's on my chart right now. So this is the next sort of plausible move that I will be looking for on Bitcoin. Question is, are you positioned? Are you positioned, or are you busy while buying in too late or selling too early? If you are one of those people, if you find yourself in one of those people, this is your time. The market is giving you time to hunker down and prepare. Okay, there are various ways in which you could prepare. The one that I personally would recommend, if you have that time, if you have the dedication, is of course the Mango Seed program. In fact, there's no better time to jump in. Sean is running a discount right now. I believe the birthday discount will be on. Someone had asked me today. It's going to be on for the next 3 to 4 days still, okay? So that coupon will still be active for then. I will be sending you guys an email just in case for those of you who miss it. But in the meanwhile, I'll be attaching it on the screen, and I will be attaching it in the description below. Okay, that way you guys can just copy paste. Some people have told me that it's not working. So I've tried it one more time. I've double checked it. It works. Just copy paste the code. Cool beans, cool beans. Now this is the major measured move for those of you trading the lower time frames. Let's go on over to that. I was very candid when it comes to trends, guys. Here's a tip. Okay, here's a tip. When it comes to trends and the breakdown of trends, get onto the time frame. Find that time frame where the trend is being established on. Okay, because that is first going to give you that signature. And based on when that signature breaks, you know that you can expect a better bid opportunity on the chart. Okay, in fact, always gun for your trades on support of that signature. Now, we had established, in fact, the signature was on the 1 hour time frame. We had established that 21 EMA was what was really reflecting that entire trend for Bitcoin, right? Ever since it broke out right here at around 20.3K. Right, this was us emerging out of that crazy SVB USDC dump recently. Right? This is the 1 hour time frame, so we had been trending on the 21 EMA. Every touch of the 21 EMA was that support region, right? So that was always a good bid to catch. Why is that a good bid to catch? Even over here, even if you managed to position on this region right here, why would this be a very good long trade to be had? Because what makes it a good trade is how easy it is for you to manage. If you caught the trade on the 21 EMA and price broke the 21 EMA, you know that you are invalidated on playing that signature. Okay, that signature is now broken, right? All you got to do is then just exit on the retest of the 21 EMA with either number one, a minimal loss or a break even, or if you exited somewhere here, you even got a slight profit. And that is what makes a trade setup a good one. How easy it is for you to manage your risk on the trade. Okay, now for those of you in the seed program, you guys have access to one of the best risk management systems. Okay, so I hope you guys are using it during these phases of the market where there's a massive whipsaw on either side on your mid time frames. Okay, because if I take you guys on over to the daily, you should have been spared from this as well as this if you were caught on the opposite side of the trade. So use that well. Now, as far as the next bid opportunity for Bitcoin is concerned, now I do believe, like I said, I'm bullish here. I do believe that the next pullback is likely going to be a bid opportunity. I'm looking for the next higher low on Bitcoin's chart. As far as the next bid opportunity is concerned, I'm keeping this fairly simple. I know that we've lost a 1 hour signature, the signature that it had been sort of following since, well, it broke up right here at around from $20,000 all the way up to, well, $26,000. It's lost that signature, so I will be looking. The next sort of major range for me comes in at around 23.5K, going all the way down to this region right here at around 22.7K. Okay, you can mark this out with a red box. It's the same region that I'd gone over in my previous video, so nothing much has changed. There's a lot of confluencing factors on the daily time frame, like the daily 21 EMA, the 2-day time frame as well. There's a bunch of things down here as well, so I'll be looking for price to make its way down there. That being said, I'm not sure if it does it immediately, especially not with what it's doing right now on the 1 hour time frame. What I'm noticing here is a symmetrical triangle-like formation. Okay, now symmetrical triangle can swing either way. Okay, it can swing up, it can swing down. Just look at the structure, higher lows and lower highs. Right, so that is basically price action squeezing in the zone. Now it could break in either direction. If, however, it takes out that 21 EMA Tenkin, that means that the pattern breaks up. Okay, at which point we get back up to that weekly cluster of resistance. Okay, that's that red box territory coming in at 25.3K. Alrighty, so right now I do believe that Bitcoin is in the middle of the range. It's no, I wouldn't short here, I wouldn't long here if I'm playing the lower time frames. Okay, I'll wait for price to either pull back for the next long opportunity, or for the next short, I'll be waiting for price to, well, get up back up to that critical region of resistance. Okay, and easy trades to manage. Right, but this is what I'll look out for. So on the next, say, 4-hour close, we close over this entire juncture here, coming in at 24.6K. I say we likely go up once again all the way up to 25.3K. However, that said, if we take out this wick low right here, okay, now this is low level price action. If we take out the wick low right here, coming in at 24.2K, I'm saying further down we come, all the way down to this region of support. Okay, this might likely be that next higher low that we see on Bitcoin's chart. Okay, getting into the next FOMC meeting. So that's what I personally will be gunning for. Am I taking any short on Bitcoin right now? Absolutely not. Okay, I'm always playing to the side of the overarching trend. And as far as the weekly is concerned, as far as the monthly concerned, I am looking at the trend and I'm saying this is trying to establish an uptrend. So I will be playing to the tune of the uptrend. Alrighty, now this is all I have for you for today's video, guys. And if you guys enjoyed this video, make sure to smash that like button, and I will see you in the next update. Also, thank you so much for those of you who have been very consistently commenting in the video. Nothing goes amiss. I see all of your comments, and I really appreciate them. So yeah, they keep me encouraged, keep me motivated. So yeah, continue to do so. I will see you in the next update with this: trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.